Hey, what's going on, everybody? It is Wednesday, June 8th. I want to talk about events next week. Today, obviously, we got a down day in the market. But next week could be your last chance to get in on the cheap. And the reason why I say that is because we got a bunch of events next week that I think Wednesday, Thursday could trigger a pullback in the market. Of course, we got the Fed meeting, which concludes on Wednesday. I think everybody knows about that. There's going to be a 50 basis point hike in the Fed funds rate. The Fed will begin some of the roll-off from its balance sheet of its securities portfolio. So the actual QT, I've been talking about that, is going to be starting next week for real. And again, everybody has this wrong, but the perception is that it is a tightening. Look, today, again, I spoke about this yesterday, another record day on the reverse repos, 2.14 trillion. The banks are literally dying to get rid of these reserve assets. They're just, the Fed created this facility because of its own ridiculous rules, having to comply with the leverage ratio, but then adding tens of billions, 120 billion a month in reserve assets. I mean, this is just cockamamie stuff. I mean, if you understand what's going on here, the Fed creates a regulatory structure, and then it engages in monetary policy and monetary operations that literally thwarts its regulatory structure or runs counter, puts the banks in jeopardy, where then the Fed has to come up with a new concoction to help, alleviate those problems that it caused when, it could just freaking adjust the leverage ratio or exclude, like it did, reserve assets from the calculation of the leverage ratio. I mean, folks, if you really understand what's going on here, this is the most crazy, insane, upside down, stupid, I mean, just like idiotic policy that, they fashion one policy, then they engage in another policy that goes directly opposite the policy they just created. Then they create a new thing in order to make up for the problems that they're causing. I mean, it's just fucking ridiculous. It really is. Like, if you wonder, like, I know a lot of you maybe, some of you have been listening to me for a long time, so you've been informed about this stuff, and you're probably shaking your head the same way that I'm shaking my head. But I mean, some of you might be new to this channel and just listening to me, and you've probably come here from reading just the mainstream stuff about, it's a tightening and, quantitative easing, quantitative tightening, adding liquidity, it's all that's just fucking nonsense. If you understand what's going on here, look, again, today, record cash flowing into the reverse repo facility. The banks are literally saying, take this money. We can't take it. We cannot put it on our books because it puts us in non-compliance with your own freaking regulatory constraints. I mean, think about that. Again, it's just like they create a regulatory environment, then they engage in operations that run completely counter to that environment, that put the banks in a no-win situation. So instead of changing the regs, instead of changing the regulations to say, okay, that was kind of dumb, because it puts these artificial constraints, and we need sometimes to, let's say, buy securities, and that's going to add reserves. So let's just change. No, instead of doing that, they come up with some new cockamamie facility. I mean, this is just Rube Goldberg ridiculous shit. I mean, it's unbelievable. Anyway, I'm talking about next week, all right? Next week, you got, the 50 basis point hike. That's completely priced in. By the way, 50 basis point is priced in June, coming up next week. 50 basis points is priced in July. 50 basis points is now priced in September. remember last week they were saying, oh, we're going to stop in September. No, now it's 50 basis points priced in September, 25 basis points priced in November. So, I mean, you know, the market's all over the place with its expectation, and it's not the market's fault. It's the Fed, you know, giving signals. This is what the Fed does. I mean, whether it does this intentionally, I think sometimes it tries to do it intentionally by, you know, its aim, its goal is to play with the reaction function of investors. So like they don't have to do too much. So the market goes, you know, to where their chatter is, so to speak. They talk about stuff, and that, you know, then it sends the market to, you know, the levels they're talking about. So they don't have to actually, you know, conduct big changes in monetary policy. They do that just playing with the reaction function and expectations. And so, but they're all over the place. Like this is the problem. Like 1 week they're saying, okay, now we're going to stop in September. No, now we're going hard in September, man. So it's like, you know, of course you're going to see volatility in the markets because that's all people pay attention to. I mean, how many times have I said, like, this is a kind of psychosis, this is a mental illness, monetarism, this idea that interest rates are either the panacea or the you know, the ill of all ills, like it's the ultimate thing that either can make the world wonderful or destroy everything, when that's just patently nonsense. Okay, so next week you got the Fed rate hike, you got QT. But here's the thing where I think we're going to get the correction in the market, the pullback in the market, and it should be short, but it could be, you know, it could be not significant. I mean, it could be, you know, a nice little downturn for a couple of days, and that is quarterly corporate tax payments next week. Remember, all back in April and early May, I was talking about what is a real liquidity drain. And a real liquidity drain is when the government takes your taxes, when it takes your money away. That's a real liquidity drain, not this fake, you know, QT or QE. That's not. That's just an asset swap, you know. But next week we could see, I went back last year to June 15th, and it was like we had a 70 billion tax day. I mean, that's a significant single day drain. It's 70 billion. So I'm expecting at least that next Wednesday we're going to see a 70 billion liquidity drain when corporate taxes are due. Some quarterly individual taxes, you know, so that's not good in this environment because, you know, everybody's on edge and everybody's bearish and everybody wants to sell. But the good news is, you know, we're back in this fiscal state where the government's running monthly deficits. The deficit right now is I think it's around 103 billion. Could be 110 billion. I looked at the number earlier, but the deficit right now for June, and you know that's through June 7th, through yesterday. It's 110 or 103, let's call it 104 billion. All right, so that's decent. But next week we're gonna get a 70 billion drain. So to leave it by next week, let's say going into Wednesday, you know, the deficit's gonna be like 140 billion by next Wednesday. Then Wednesday we're gonna get a 70 billion drain. So the deficit for June as of next Wednesday is going to be at around 70 billion, but it's still a deficit. I mean, that's good because that's still a net liquidity provision into the economy. The problem back in April and early May, they were running surpluses. They ran a 330 billion surplus in April, on April 18th, and then they ran, you know, that ended up to be a 50 billion surplus as of May 13th. So they ran for like a month pretty much this massive surplus that was just a net drain from the economy, from bank accounts, from bank deposits, you know, a massive drain. And so the stock market had a very rough time. Now, you know, this one is going to be smaller. It's still significant. I'm not saying it isn't. I mean, 70 billion, you know, we're not running 3 trillion annual deficits anymore. We're running a little over 1 trillion. So, 2 trillion of deficit spending, it's gone. I mean, if you want to know where the savings have gone, that's it. The government took it back. I mean, I've explained this so many times. The only way the government can balance its books is it's got to take, our surplus away. I mean, that's it. People run around saying, oh, you got to balance the budget. We do it at home around the kitchen table, and the government's, no. If the government does that, it takes all our money away. It takes all our money away. I mean, what good is that? So anyway, next week we're going to have that drain on Wednesday. I'm just letting you know. I went back and I looked at market action last year around the same time when we had that corporate tax quarterly payment. We had a quick move down of about 2% in the S&P. This year, because of the bearish sentiment and because fiscal is just lower this year than it is last year. I mean, it's not low historically. I've been saying that to you guys. We're still running near 600 billion a month, which is, that's at least a 25 to 30% increase in the monthly fiscal flows from the pre-pandemic level. So that's solid. But I mean, we're down from last year by a significant amount. So the market's a little more wobbly because of that. You don't have this massive tsunami of liquidity month after month after month like we had last year when the market was going straight up. So just be prepared is all I'm telling you. But that pullback, that's it. I mean, we're good after that until the end of September. All right? I mean, there's no more, or I should say till September 15th when there's another quarterly corporate tax payment. So, this is where the summer out. If you want to know like all these things like sell in May and walk away, that's because the big drain that comes in April with taxes. Then, it takes time to rebuild. The government spends that money back out into the economy. The deficits start to accumulate again. That's a net liquidity addition into the economy. The stock market starts to recover. You get a little bump now, like in June with this corporate tax payment. And then from mid-June, okay, all the way until September 15th, all right, September, October, generally bad months for the market. Why? Again, taxes. I mean, but we're going to have clear sailing from mid-June into September. So you got July, August, September, 3 months. We're going to have I'm pretty sure we're going to see a nice sustained rally. Sentiment is very, very negative. Everybody's freaking out about QT. And again, just like I told you, the banks are falling over themselves to give the money into the Fed's reverse repo facility. They don't want it. They can't use it. It just puts them in not in compliance with the Fed's own regulations. And again, I mean, every time I talk about it, it really makes me mad because this is idiocy. This is absolute, complete idiocy. Okay, there's idiots running this thing. All right, the other thing I want to talk about, because a lot of you guys, and again, some of you have been following me for a while, so I think you get it. Some of you maybe just came over here new. This whole thing about inflation, everybody, inflation, it's terrible, it's horrible, it's the worst thing in the world. I keep saying, inflation is a redistribution of income, just like interest rates. When you change interest rates, when the Fed changes interest rates, it's a redistribution of income. And why do I say something like that? And you might think, oh, there he goes again. Look at what's going on. Today, ExxonMobil, the stock, hit a new 52-week high. And guess what? Walmart hit a new 52-week low. So, or it's close to a new 52-week low. There's your redistribution of income. It went from, consumers to producers. There it is, clearly. Like if you're crying and complaining about inflation, and I understand it because you got to put gas in your car, you got to buy food and this and that. But if you're an investor at the same time, I'm not saying that maybe that's not your occupation, just being an investor. You might have a job, you have your house payments and insurance and food and other costs. but at least protect yourself and don't go like, oh my God, inflation, I'm helpless, there's nothing I can do. You take advantage of the fact that if you understand, hang on, if you have knowledge, you can profit from knowledge. That might be a new concept to some people, but if you have knowledge, so like what's going on? Food producers, energy producers, those stocks have been going up. You know, my portfolio is loaded. As a matter of fact, though, I have to disclose that today I actually took some profits on some of my oil stocks because I saw today's EIA petroleum report, and boy, a big, huge drop in crude oil and product exports. We saw a surprise build in crude inventories. They're still low, you know, historically low. Gasoline inventories were down. Distillate inventories were up. Gasoline, you might find this interesting. Gasoline demand at the highest level in 6 months. So it doesn't look like high prices are curtailing demand or any demand destruction coming from gasoline. However, distillate demand was at a 5-month low, and a lot of people say distillate demand is, you know, that's a good barometer of commerce and economic activity. Distillate is diesel fuel, that's trucking, that's all this kind of stuff. But the big thing that I saw was, man, a big drop. We actually flipped, U.S. flipped back as a net importer of crude and petroleum products for the first time. I think it was like for the first time in 4 months or 5 months. We have been net exporting, but there was a big drop in exports in the latest week. Crude exports, I think they fell by the most in 29 months or something like that. It was a big drop. And product export. Now maybe that's just a 1 week thing, but that drop, I pulled some money off the table on oil stocks today, and I actually bought some yen, some Japanese yen, because if oil prices go down, I think you're going to see the yen rally, because the yen's been, well, I should say like this, just collapsing. And I also sold some Canadian dollar today because Canadian dollar has been tracking oil, and if oil corrects, then I think we could see the Canadian dollar go down. So that's the update, folks. Next week, and by the way, next week, I'll tell you this right now, and I'll repeat it next week. If the market goes down with the Fed, you know, the Fed, 100%, 100,000%, the media and the analysts and everybody going to be saying, I told you so, the Fed, they raised rates, it's bearish, the QT. But the real reason is going to be that 70 billion tax drain. But look, that down move that happens next week, you buy that, because that's going to be a fantastic entry point into the market. All right, everybody, that's it for today. See you tomorrow. Bye.